is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. But you're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to say yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials up 502. NASDAQ is up 129. S&Ps are up 44. Percentage-wise, what you have is this. You have the Dow up 0.2%. 2%, rather. Sorry about that. S&Ps are up 1.5%. NASDAQ is up 1.8%. If we go over and we take a look at the Dow Industrials first, what you're going to see is this. If we go from the highs to the lows, what we have, we just got by a 0.382 retracement. So I suspect, actually, no, we haven't, this is interesting. No, we haven't made a 0.382. 25,000 is going to be a 0.382. So bottom line, you're still in dead cat bounce territory. From the highs out here of that 26,000 down into the lows of Friday, which was the price point there of 23,360. We take a look at the NASDAQ composite. Composite kind of set up the same way. Composite out here, you're up 130 bucks. You are trading at 7,004, and let's see what we have for on this baby. So from top to bottom, this baby has done a 0.382, over a 0.382. So this is saying the NASDAQ actually can get up to the 7068, which would be a 50% retracement of the move on the way down. We go take a look at some of the volume characteristics on this one. If we go take a look at the SPY first, what you're going to see is this. It's anemic, folks. I mean, in a big way. So bottom line is that when you had the first bounce, which we go back to the 7th of February, which was last Wednesday, what you had there is this. So picture this. You came off the highs. First day down, you had done 173 million. Second day, down 355. You did the counter trend bounce with 167 million. So 167 was going against that 294. We blow out to the downside once again. You do 246. Friday we did 238. Guess what? You're going up with 92. Bottom line, that's an anemic bounce, and you very well are setting up a much larger ABC down. Now, what happened is this wasn't a confirmed ABC down. The reason being is that when we took out the B point, you didn't have the volume. The volume that we had was 283 million versus 355 because it's all about energy, and that energy got expended because it went so fast without building cause on the way down. Gold contract right now is trading at 1325. If we go over to that gold market and take a look at it, this is what you have happening inside the gold market. Gold market hits a low today of $1,316. Friday, we hit a low out here of 1309. That was coming into the December 29th, as well as the January 2nd sign of strength. We rejected it. You get good volume out here today. Bottom line, where they expect you're going to build some cause. make our way back up to this 1,370. If we go to the GDX, we take a look at the GDX, some of the equities, nice move out here. The GDX on Friday did reject lower price. You had volume expand on the GDX, which is always dangerous. That being said, we were going into the downdraft that had been created out there from December of 2016. That was at 540 million versus 326. So the bottom line, it didn't break at number one. You did have lighter volume. You did have an expansion of volume. What you have inside the GDX today, it looks to me like it's off the bottom. Has a shot now to do what? Can't bust them down? Guess what? Gonna bust them up. 24 bucks. XAU and HUI, same type of setup inside the XAU and the HUI. In fact, when you take a look at the XAU and the HUI, they both came into their December strength, rejected it, didn't break the swing, have volume behind the move at the highs. And this is a big number because when you take a look at the XAU, we have volume up there at the 92.94 at 49 million. Gold Bugs Index, we take a look at the Gold Bugs Index, put the Gold Bugs Index up there. And what we have inside the Gold Bugs Index, that's up 550 right now. Put that up. Let's see what we got here. Okay, so the Gold Bugs Index came into the, first off, it busted the December low. That being said, we went into December of 2016 with dramatically lighter volume. When we're talking volume here, you're talking about 156 million versus 214. You come off that level, that's saying that the Gold Bugs Index also is going to start making a run for the top of this last swing high, which is 209.36. Notes and bonds are still having a hard time. It's going to be intriguing to watch this note market. It looks to me that it's trying to get a bottom in, hasn't been able to catch a bid in a long period of time. We've hit the 120.20, hit that twice intraday out here. Hasn't caught a bid whatsoever. We'll see whether they can close up into closer to the 121 level versus where we are right now. Because right now it's in no man's land. Right now you do have lighter volume, but bottom line is that you are pushing against these lows of last week, and it's not holding price. The 10-year yield right now is trading at 2.860. That is the high. That is probably the high for the last year or two. Let me put this up. Yes, it is. The low for the last 12 months is 2.03%. The high is 2.8%. King dollar bottom line moving sideways out here today. Doesn't have a bid behind it. What you did have last week, King dollar basically got a little counter trend bounce going, not telling us much out here today. 18,000 contracts, you're moving sideways. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now trading up 556. NASDAQ is up 144. S&Ps are up 50. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's go take a look at some of the higher volume equities out here. You have GE. GE is the leader out here today. GE is, well, actually it was. Now Bank of America is. Bank of America is up 97 cents, trading at 31.30. You get Advanced Micro up 46 at 11.77. GE is down 5 at 14.88. Apple, big number in Apple, up 7.20 at 163. So let's go over to Apple. You know, Apple had gone all the way down to the lower end of its range. We had just gone from 180, hit a low of 150.24 on Friday, and it just now. So watch this, folks, with Apple. I'm going to bring this and put this on a weekly basis. So what you had is this: you had a high volume low laying out here at 149.16. You had 154 million shares. Well, we got to 150.24, and you had 317 million. This isn't over for Apple. Apple's going to come down. It'll test that high volume low because that is a monster high volume low now. And if we put this on a monthly, what you're going to see is this. On a monthly, this gets intriguing on a monthly because what happens on a monthly, it looks like that you have a hammer, okay? But what happens is that, and this is where inside candlestick charting, it's not tricky, but you really want to understand what a hammer is, what a hanging man, and why. And a hammer is set up after a downtrend, not on 1 month. When you're looking at this a monthly, it's not a hammer. The bottom line, I would say that it's not telling you a whole bunch. That's the real bottom line. On the weekly, we put it on a weekly, it's a doji. And a doji is a halfway move down. If we put that on a daily, you do have a nice hammer on the daily for a nice bounce. That's how this is shaken out. It had gone all the way down to a price point of 150, closed at 156. You know, so that's a powerful hammer. That's what that comes down to, because the longer that your stem is, the bottom line is that the more powerful that it's telling you it is. So I suspect Apple can bounce up to this 168 probably. Let's go over and take a look at the banking sector. We'll go take a look at JP Morgan first. JP Morgan out here, you're up 250. You have done 12 million shares. Bottom line, this is not enough inside the financial to basically say it's going to higher price. What you have is that you are going up today on 12 million. You've gone down on 27 million. You've gone down on 28 million. You've gone down on 30 million. So this is a counter trend bounce. Let's go take a look at the XLF. And what has happened fundamentally is that the curve, interest rate curve, is positive for the banks. But bottom line, technically, the setups inside the banking structure right now still stand. We're going to lower price. The XLF right now is up 57 cents. Volume's anemic. You get 64 million. You're going against 147. I expect to get a little bit higher, but bottom line, there's no juice there. Bank of America, who is the leader out here today, volume-wise, that's better than JP Morgan's looking right now. You get Bank of America right now up $1. That also is anemic, though. 68 million versus 155. We're going to take a look at the XLE. XLE, folks, is going to get some big problems. So first off, you had ExxonMobil come off the highs. Exxon comes off the highs. Oil comes off the highs. The XLE has gone from $78 down into Friday's low was $64.45. We're at 68 right now. This can, do a bounce somewhere up to about 71. That being said, what you're going to see, you bring this back, we're at the same place we were in 2008. It's pretty amazing watching these oil stocks. ExxonMobil, that's trading $76.70, down from 89. You put this back, and what you're going to see are 2008 levels. The oils love trading these big consolidations, but ExxonMobil is actually back at 2006 levels. They do pay a 3% dividend, so they've collected that. But bottom line, Exxon looks to me like it wants to run down to the $66 level. So you're talking about big numbers. Amazon. Okay, so what do we got? Amazon. Amazon's up $52. You're 5 million shares against 11. Same type of setup. Every one of these you bring up, you're seeing counter trend bounces. It's going to take a bit to repair the damage that's out here. And these lows that were out here on Friday, I expect you're going to see them at least tested. The news on Amazon, this is you don't hear this quite a lot, is a job cut. Bottom line is that Amazon's cutting hundreds of jobs in their headquarters in Seattle. And maybe this is just a setup from when they're going to start moving people around. And bottom line is that they're basically managing that company. They're scaling back older departments, focusing on selling goods online. The move is part of a broader reorganization at the companies as it's hiring in new lines of businesses like cloud computing and the Alexa platform. Pretty intense. The reduction in positions is modest for Amazon, which counted 566,000 employees at the end of 2017. That's up 66% from the previous year. Due largely to the acquisition of Whole Foods. Man, Whole Foods must have had a lot of people then. As part of the annual planning process, this is their quote, "We are making headcount adjustments across the company, small reductions in a couple places and aggressive hiring in many other places," the company said in an email statement. For affected employees, we work to find roles in areas where we are hiring. Amazon has 3,900 corporate jobs open in Seattle. Oh, my God. Part of the 12,000 such positions open worldwide, according to a person familiar with the matter. Imagine having 3,900 jobs opens, man. That's about as intense as you can get. There's no two ways about that. Let's go take a look at Google, see where Google is. Google had taken a monster hit last week, folks. Google's up $20. We're trading 1,058, same type of setup. Google went from 1186, hit a low of 992. You're up on 1.5 million going into 3.4. Trouble in paradise all over the place here. Let's go take a look at the silver market. So silver, this is going to get intriguing because what silver did, silver's up 2.3% today. Finally caught a bid. 76,000 contracts, big number contracts, good number in contracts. And what silver had done, silver went down to the bottom of its range. And they rejected it. Bottom line, they rejected that December 13th area. The high of that was $16.18. We got to $16.13. It closed at $16.13. You're coming off that level. Bottom line, looks like it's going to make its way back inside the higher range. I can tell you, inside the metal market, folks, bottom line, I like how the thing's set up. What is going to get intriguing here is to find out. Okay, so picture this. When the market took a monster hit, the gold contract also took a hit. The equities also took their hits. That being said, the hit wasn't as large as the broad market. Now what we see happening out here is that the broad market's coming back. The metals market is good. The equities inside the metals market's good. So my larger take is that, yeah, the S&Ps are going to pull back down again. The real question is going to be how much further they take the gold contract, the silver contract, and the gold and silver equities. My take is that they'll pull back, but each and every one of these pullbacks inside the broad market, it'll be lighter inside the metals market. You stay right there, folks. We'll come right back. Dow Industrials up 536, NASDAQ up 140, S&P's up 48. We'll come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 539. You get the NASDAQ up 138. S&Ps are up 48. Let's go to our man, Al in Tampa. What's going on, brother?
Not much. How you doing, Tom?
I'm doing
this
great.
Market's been interesting this week.
That's a fact, no doubt. No doubt.
What I like to do is look at lumber liquidators. Those $2,000, those $1,000 downs, couldn't push it through 2409.
Yeah.
We got a little bit below there, and then also too, I couldn't push it the other day, but it went down today on some bad news. somebody downgraded it, but it seems like it's kind of put a bottom in, and
it's still holding. Yeah, I can see what you're looking at. Right. Interesting. Yeah. So I still wouldn't bite. Now, this is why. What Al's talking about, folks, is this. So picture this. This is important in the context that, you know, we had a vicious market last week, and this didn't basically go lower. You know,
it was actually up one of the days. It was down 1,000.
Right.
It was interesting.
Right. Now, that being
it's like
said,
somebody, like you said, somebody knows something in that, and
well,
okay, go ahead.
You know, that's showing that, you know, you have buyers down here. There's no doubt, and the sellers are already out of the stock. So that's what that's showing, number one. Let me just see what the short interest is in this. Okay, so you got 13% short interest. You know, I don't like this volume today. I mean, you know, you haven't hit the swing, but you get 2.7 million going against this 1.1. I'd just give it a little bit longer, Al, to make sure that you know, this can get to
19 something.
Yeah, even 16. The highs and the lows are $16.12. Let me see what else is holding this up. So right there, that's. Oh, I see what you're looking at. You're looking at that $19.46 there, right? That's the low. What he's looking at. That's the low of when it had strength in May of 2017. Yeah, and see the high of that is 30. So we're already at 24. So you know, bottom line, I'd let it lay there until then. Your risk would be so much lighter. And what was the news they had out there? That was just a downgrade, right?
It was just a downgrade. And also, too, you got to remember the last time I got caught, they were doing all these upgrades saying it was going to go to 43.
Yeah, right.
They were talking the talk, and it went the other way. Then I got the killing when it went, you know, they went ballistic on August 1st on me. They were talking it down, but it sit in the base for a while, and it went from like 24.89 up to 35 on me.
Yeah. So what this guy's saying out here today, so this is Wedbush, Seth Basham. He says, let's see, downgraded the company to neutral from outperform, citing slower growth and increased margin pressure. It says that not found its ideal mix of merchandise, advertising, and store personnel to boost traffic, expects traffic growth to remain muted. You know, these stores are busy, man. I don't know about Lumber Liquidators, but they're all busy.
Yeah, I talked to somebody that's in it, and they had it really busy. I've got another one, if you could look at it. It's MOS, Mosaic.
MOS, yep. Okay, so let's take a look at Mosaic. So you got Mosaic. This is the large nutrient company. The low is 19, the high is 34. They're coming out with the numbers after the close, February 19th. Put this on a weekly.
I'm a little bit lucky with this. My next door neighbor behind me works for CXX, and they've been putting trains on.
Yeah.
And then my tenant in Lakeland works for the trucking company that moves. He's a mechanic there that works for the trucking company that's moving all the phosphate, and they just opened up another area of the mines.
Yeah, no, I like this. I like this. And I suspect what this is going to have to do with, I mean, I think we're in a commodity bull right now, and, you know, we'll see whether the agriculturals can really get off these lows. You know, today, soybeans doing pretty good. It's up almost 2%. Wheat's up 3.3%. And, you know, they've been coming off that bottom, but this looks like it can get up to the $28 level. And we're at 20.
Yeah, this has also had the problem with the sinkhole in it, too. So they
know that.
Spent a huge amount of money on that. So that's coming to an end, too.
Yeah, and what has happened, folks, what happens, they've buried that pretty good. Mosaic is right in Florida, folks.
2 years ago.
Yeah, it's not that far away from us, actually. And what happens is that, you know, we get these large... Well, bottom line is you only can take so much out of the earth, with, you know, without basically the aquifer getting hit, and you get monster sinkholes. And we have plenty of them in Florida. And I think that's just a money issue. I mean, they pay it off, and then that's it. You know what I mean? It's...
Yeah, It was on their own property, didn't go into the aquifer, so
Well, that's
they
what they're
pumped a
saying.
bunch of
Yeah.
concrete in it and took care of it. So
Right. You just don't want them to
I was in that industry
I
for
know.
like 11 years.
I know that.
So
I know that. So
well, thank you very much, Tom.
Okay, man. Have a great one. Have a safe one. If we go take a look at, let's go look at the future. Say, my take right here, too, by the way, folks, is that we're in the beginning of a nice bull market in commodities. Wheat's up 3.3% today. Hogs are up 2.4. Soybeans are up 1.9. Corn's up 1.3. Let's go over the wheat market for a second, see what we have here, because these commodities have, got killed for a long period of time. So wheat's off the low from December. That's $4.10 a bushel. You're at $4.60. We have 124,000 contracts today. That's good contract volume. I mean, wheat looks to me like it's on the way 482. Let's pull this back, and I'll do this on a continuous contract. Let me see what we got here. So do it this way. Okay, so 464. Take this, put this on. Yeah, you can see. Okay, so check it out. Wheat has gone from 2012, $9.47 a bushel, hit a low of $3.59 a bushel, August of 2016. Next low was December of this year. This is a nice setup, man. I like the setup. Now, it's impressive is this. If we bring this back, and you're seeing the last highs in wheat was 2012, that is also the last highs that 2011, the end of 2011, that we had inside the metal market also. And time just flies, folks. But the bottom line is that it looks to me that they want higher price. If we go over into the dollar, it's going to be the dollar going lower. That is going to drive those commodities higher. That's how the whole thing seems to be shaken out. So it's going to be wild. What we're going to see quite a bit of in the next few days is the amount of different companies and what the tax bill is going to be doing to them. Let's go. Let me just see what Dollar Store is doing out here. Where's Dollar Store? As soon as we come back, we'll take a look at Dollar Store. I believe that's getting hit out here today because all these analysts are finding different things. Yeah, it's down 2% today inside the tax bill. You stay right there, folks. We'll be coming right back.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 481. You get the Nasdaq up 126. S&Ps are up 41. It's pretty wild what a difference bottom line of a week and a half makes. You know, we have the S&Ps moving around at 11 points in a heartbeat like nothing. When prior to the 2 weeks ago, 11 points, the S&P would move, but it would take all day for them to move 10 to 11 points, and it was only moving one way. When we take a look at this market out here today, what you're going to see, bring this a little bit closer, and you're going to see that the movement was really cool, man. I mean, we're talking. Okay, so we bring this up. What you're going to see is that you came out of the gate. We came out of the gate. You go up to 26.54. By 10:30 in the morning, you're at 26.20. Gave up 34 points. That was by 10:20. By 12, you not only took back all the losses, you went much higher. We went from 26.28 all the way up to 26.60. So you up 32 points, went sideways for a bit, then got all the way up to 26.71. And just in the last 10 minutes, we gave up 10 points again, and more than likely we're going to see is coming into the close, probably somewhere about the 26.55. Where I'm going with the 55, that was the last, well, first off, the sell-off from a few minutes ago, that has volume at the lows there, at the 26.55. But when we broke topside at, let's see, at 10 of 1, that seems like a space can pretty easily get to, because the real question's got to be, as you come into the close, as traders come into the close, are they going to take their bread off the table? Are they going to ride this overnight? That's going to be a big toss-up. There's no two ways about that. Let's go over to the UK for a second. Look at a few of the European stocks, indices rather. The UK, this is, the FTSE had taken a monster hit. FTSE went from 77, let's call it 7,800, down to 7,000. You know, so you're talking 11% hit. That leveled out, and I won't have the volume on this till tonight. Yeah, I won't have the volume on this. Let's just take a look. Well, what it did do is that on Friday, though, what it did do, this is pretty cool. So this had a high volume low on the 6th of February, 1.3 billion. It tested it on 900 million on Friday, and that's what that bounce is all about. The real key is going to be inside the FTSE, the DAX, the CAT, all of them. What type of volume do we have on CAT? DAX, that's what I want. Sorry about that. What kind of volume do we have on the bounce? That's what we're going to be looking for. And I'll get that about 8 o'clock tonight. So the DAX, oh, the DAX already looks like it wants to give it up. Well, this is going to be intriguing. So the DAX, folks, had gone from a high of 13,596. That was on the 23rd of January, down to 12,000. Big number, right? So it went down 1,600 points. The DAX couldn't even hold price today, so this is pretty cool. We're going to get quite a bit. We're going to know quite a bit about this. Now, I still don't have the volume, but no volume whatsoever. I mean, no price. The price couldn't hold out here today. We made it to 12,379, then it closed out at 12,282. So the DAX very well could tell us quite a bit tomorrow how our markets look to be trading. If, in fact, this is just a bounce and that's it. As we're coming into the close, you can see what's happening. The traders, they're taking their profit, man. They're taking it quick. When I just went over to the DAX and the FTSE, bottom line is that the S&Ps just gave up another 21 points. No, 11 points rather. But we're down 21 from the, actually we're down 24 from the high that was generated just a few minutes on the air. So now you get game once again. You gotta, as a trader, you gotta love this volatility. This volatility is, you know, one beautiful thing. And when you're trading this, folks, what you have to be doing, you know, if you're trading the futures, bottom line, you ride them up and you keep bringing the stop up. You ride them down, you keep bringing the stop down. It's that's how I would suggest that you do it, because what ends up happening is that, yes, they're going to be violent moves, but what tends to happen is that because there's so much movement, you can go on both sides of this market and grab something on both sides on a continual basis. What you don't want to be doing is thinking that you're going to go on one side and you're going to try to ride it. It won't fly, because the moves are violent. They'll continue to be violent for quite some time. And my take is that each and every gap opened, that's what I like to see, a gap opened higher, that is a gift from the trading gods, you know. And what I'd like to see specifically is something getting up, particularly the NASDAQ, into that 50% retracement. The reason being is that it's made it past the 0.382, so it would make sense that, hey, why can't it make it to the 50, you know? Make it to the 50, your reward goes up slightly versus the risk. We go take a look at the, so we went through Amazon or Facebook. Let's go to Facebook. We take a look at Facebook. That's a dead cat also. This is pretty cool. So Facebook's off a high of 195, made a low of 167 Friday, high volume low. You get 28 million shares. You're going into 38. That doesn't fly either. The NVIDIA. Now, NVIDIA came out with numbers. NVIDIA is conquering the world here between Bitcoin mining and artificial intelligence. And, you know, the way Bitcoin's set up, I mean, not Bitcoin, the way NVIDIA's set up, it looks like it can test these highs once again. Because you pushed with volume into a swing high on Friday when they come out with their numbers. That's the bottom line. You know, so this 249 is going to be game once again. That being said, NVIDIA is down to $4.90 right now. But bottom line is that looks to me like a higher price wants to get in there. If we go over to the NQs, they're selling these NQs off fast, man. The NQs, we just sold down 47 points. You're at 65.17 right now inside the NQs. Man, when they unload them, man. Oh, my God. So, you know, let's see. Yeah, at 20 past 3, we were at 65.67. Right now, you're at 65.18. That, let's see, where are we at? Right there. What number is that? That's 65.05. So 65.05 is game. And where that is, folks, that is from the 9:30 opening bar. That's game. This expansion down, by the way, be careful if you're buying this expansion down. The volumes just blew out of this futures market on the way down. We just did 14,000 contracts in that 10-minute. Just to give you an idea, we did 6,700 on the way up with a busted topside. And what that bust topside more than likely was that was a large operator seeing how many more orders were higher. There wasn't enough higher. Guess what? Can't bust them up? Okay, let's see if we can bust them down. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 402. NASDAQ is up 101. S&Ps are up 33. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 440. You get the NASDAQ up 109. S&Ps are up 33. Percentage-wise, we have the Dow up 1.8%, NASDAQ up 1.6, S&Ps up 1.5. Coming after this close, folks, going to have lots of numbers out here. We get Fossil coming out. You get, let's see, Baidu.com. That'll be a big one. That's at 430. We got MetLife at 415. You get Occidental Petroleum at 415. We have Voya Financial at 415, Compass Minerals at 430. If we do go over and we take a look at the Diamond Offshore came out today, you know, and this is where you can see the shale drillers, right, taking these drillers to the cleaners, folks. Bottom line is that Diamond Offshore, you know, came down last 2 weeks from $20 to $15. That being said, if you want to see a long-term chart, that just is a mess. And showing the difference that what it takes to get oil out of the ground, this is down from $100. And $100 was trading in 2008. When oil went back up to the price point of over $100, it got to 68 and then never came back. And that's all about their business. Well, here, let's go over to rig, too. Transocean. Transocean's at $9.54. You want to see another mess? This is pretty amazing. This here, we bring this back. This is down from a high of, oh, man, this is intense, $163. $163 in 2008. In 2011, it was $85. Bottom line, now you're at $9. And this is all about, we have plenty of oil. Oil's easy to get. It's shale. That's what's going to be running this whole deal for quite some time, folks. You know, ExxonMobil last week, and this is pretty intense because Exxon when they come out with their numbers, bottom line, they were saying that they are taking out 600,000 barrels a day for 7 years out of the Permian Basin in New Mexico. Bottom line, the good, the bad, and the ugly. The good, $15. The bad, $15. The ugly, $15. Guess what? If $15 oil, folks, comes out of the ground, oil's going lower. You stay right there, folks. Coming back with lots of numbers for you.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night, folks. Let's make it a great week. Accept others the way they are. You cannot change other people. To try to change them to fit what you want is like trying to change a dog into a cat or a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 410. NASDAQ was up 107. S&P's up 34. 1.7% gain in the Dow, 1.5 in the S&Ps, 1.5 in the NASDAQ. We're going to take a look at the spread out here today. We had a nice spread in these indices, folks. The Dow got up to a price point of 24,765. Bottom line, still up 410, but gave back 165 points from its high. We're going to take a look at the NASDAQ composite. Also, good numbers, up 107 points. closing out at 69.81. That being said, we were 43 points higher. We were at 7,023. Volume-wise out here, anemic in a big way. Inside the NYSE, this had better gone up somewhat. Yeah, it went up somewhat from the close. So they put 300 million into the close. Right now, we did a 1 billion versus 1.3 billion. Inside the NYSE, what we did out here, I mean, inside the NASDAQ Composite, we did 2.2 billion versus 3.1. That is the makings, folks, of a counter-trend bounce once again. If we go take a look at the SPY, what you're going to see inside the SPY out here traded up to a high out here of 267. You're at 265. You've done 133 million. You're going into like 355. Now, there's no reason that you can't, get a bounce in the SPY up to like 267.58, which is the low of the last bounce that we had. 268.17 is the beginning of the downdraft that happened on Thursday. Bottom line, though, you're going up here with anemic volume, and this is quite a setup. If we take a look at this and we do this on a weekly, what you're going to see, it sticks out like a sore thumb. And on the weekly basis, folks, the bottom line is that what you have is this. You have a technical damage that is pretty intense. And the damage that's out here basically says that we can come back to the November of 2016 levels. That's going to be one big number if, in fact, that's what we do. If we go take a look at the three Qs, we take a look at the three Qs, you put those on a weekly basis, same type of setup. The destruction that is out here is actually more intense inside the Qs. Maybe it's the same number. Yeah, it's the same. It is the same number, I guess. Well, so. No, in the Qs, it's actually to the July of 2016. Now, that being said, now watch this, though. This is where this gets really wild. Is that July 16? Yeah, look at this. Now, that being said, if you want to see the type of retracement that you have out of the whole move, that's nothing. That is, this would be pretty intense. So the July level that I'm talking about is only a 0.382 retracement from the lows that were generated in 2008 right up to where we are. Because you got to remember something, that is one monster move. And this is where, when you just look at the percentage retracements after you have not had a pullback in so long, percentage-wise, it can be the same percentage, but yet monster numbers. And then on top of that, what you end up having, unfortunately, is people leverage themselves on the way up. Gold's in good shape. Bottom line out here is that if we go take a look at the gold contract, what we did, we caught a bid. The real thing that's going to be intriguing inside the gold market is this. So gold out here today did 202,000 contracts. We up 840 right now. You made 1330 or 1324. Gold had already come back down, tested the December 29th as well as the January 2nd breakout area, had lighter volume on the test, goes topside with decent volume. Now, what it looks to me, and I talked a little bit about this in the first hour, is that when you actually take a look at the gold contract, it really held pretty well for the type of downdraft we had. Because you got to remember something. Sorry about that. I got to get this thing straight. That equity-wise, when you come down that fast, they throw everything out of the water. Everything. What I expect we're going to see is on the next pullback, you are going to still get pressure inside the gold equities, inside the silver equities. That being said, it's going to be less pressure each and every downdraft. And when all said and done, bottom line, metals, commodities in general want higher price. And where that's going is all about the dollar. The dollar is in a much larger ABC structure on the way down. Bottom line, we'll see what type of firepower that can actually put inside the commodities. They had it today. Wheat was up 3.3%. Hogs are up 2.4%. Beans are up 1.9%. Let's go over to the copper market. Copper got killed last week. It looks like copper's in a consolidation. Yeah, so copper's gone from 332 in December. We hit a low last week of 302. It did 91,000 contracts today. Yeah, this is not done going down either. This went up with light volume. 91,000 versus 189 the way down. Copper wants to run down to this 294 level. So copper's in a range. The bottom of the range is 294. The top is at 332. What we do have is that the agriculturals, they caught a nice bid. Let's go to cocoa. Cocoa's having a hard time. Cocoa is down 2.5% today. I see. That's not that bad either. Okay, so that had just had a good bounce. It's on light volume. Okay, that's pretty cool. Yeah, this is in a range too. Cocoa looks like you get 1945 that'll hold the ton, and right now we're at 2007. You stay right there, folks. We'll be coming back with some numbers for you. Dow Industrials finished up 410, NASDAQ up 107, S&P's up 36. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And folks, if we take a look at this 10-year yield right now, well, first off, the price of the bond, the price right now, 120.27. The low of last Thursday was 120.17. We hit 120.20 today. The low of last Monday was 120.18. Now, we hit both of these, and we hit them with dramatically lighter volume. But we didn't reject price. What's going to get intriguing here is that the next big number for the bond market is going to be on Wednesday, the CPI. What we do have here, as reported by the Futures Trading Commission, is a fight with the bulls and bears in an extraordinary way. Now, this is normal because bottom line is that folks have thought for a long period of time that rates are going up, period. Bonds are going to get smoked, period, which hasn't happened. That's the bottom line. That hasn't happened in a large way within a bull market since 1980. So how's this lined up? Well, here, check it out. This is pretty cool. So right now, as of last Friday, now this is reported by the Commodity Futures Trading Commission. The data, this has been the, let's see, the largest short position. Right now, net short 10-year is 939,351 contracts. So the bottom line is that that side of the market is saying that rates are going to go higher, prices will go lower. Okay. Now that being said, check this out. This is intense. So you have one of the largest short positions that have been happening since 2013. On top of that, however, you have the longest net long position inside the 10-year since October of 2015. So they're lined up on both sides here as to what way this whole market's going to go. So the next big bit of information will be coming out on Wednesday, the CPI. The CPI can move this. So we'll see where it shakes out. You know, thus far, what would happen for the 10-year to get back inside the larger range, let's bring this back on a larger basis. Okay, so we broke out of the range when we broke under 122.25. So you can see that's quite a way that you got to get back inside that range. And that range has been going on since June of 2013. Now, that being said, you're definitely not in the lower range. The lower range, you need about another 3 points down into the 117 area to get back into a much lower range. So you're still in a much higher range. You're in the range when we had broken topside in 2008. This is going to be a big number, though, to watch how this shakes out. If we go take a look at the 30-year, 30-year right now is at 144.09. US 1. We got to put this. Now, the 30-year had broken a major swing, and that was the first time since 2000. We broke the 147 level, which was the first major break since 2000. We broke 147.07. That was the lows that was generated in March of 2017. That being said, you know, bottom line, you can see this has to get under, well, it's getting close, actually. No, we have to get under like the 143 to 141 level to be in the lower range. You know, right now, we're not in the lower range. So these bulls and bears inside the bond market are going to be fighting like crazy, because what has happened is this, is that when we went downtown last week, money did not flow into that bond market like it has in the past. You know, if you were down 1,000 points, those bonds would be up 2 points. It didn't happen. What did happen out here today is that the market's going higher and people were laying money off into the bond market. Now, what very well could happen is that you get a bounce like this. People have made a lot of money in the equity market. They might be saying, hey, you know what? I'm good for a while. I'm taking some of my bread. I got a bounce going. Taking the bread, going to put it in bonds, lay out for another couple of years, or lay out for as long as I want to do. I'm done with, you know, this for a certain amount of time. You know, we'll see how that whole shakes out. They're all in game right now. They're, you know, the bonds are in play, King Doll's in play, the market's in play. If we go over to the euro and we take a look at the euro currency, Euro currency's trading at almost 123. You know, all this had done is come back to where it broke topside from. This looks to me like it's going to go right after the 125 again. If we put this on a much larger basis, you're going to see that you already broke topside. You know, on a larger basis, this is saying it's going after $100.39. And right now we're at the 125 level. So you're talking about a monster number there. Let's go see Fossil, F-O-S. If Fossil came out with numbers yet. Fossil closed at $8.39. Let's see what they have to say. No, it's gonna, okay, they're coming out tomorrow. They're coming out tomorrow night. That's trading $8.39. And this baby, whoa, man. Some of these retailers, you talk about getting killed. Imagine this stock went from $139 down to $8. Yeah. Talk about a round trip. 2009, it was at $12. 2012 was $139. 2013 it was $134, and ba-boom, one way. You know, the bottom line is that there's a couple articles about this too. I think we're wearing less clothes too. And one of the articles, it totally makes sense, because the reality is that you used to have to get dressed up a lot more, whether you're going to work, and then you're playing, you're going to have more clothes. And I think once you decide to have less clothes, bottom line is that you say you have less clothes, big deal, right? It's pretty cool, actually. You don't have to worry about going in your closet looking at a million things as to what I'm going to wear. Some of the higher volume stocks out here today, we had, well, actually, let's go to GE, because GE's $14.82. And see, this is a little deviant. You know, GE, and this is, keep this in mind. This is what's so dangerous about an equity. So you can make two different theories on this. GE last week actually went from 14.23, closed at 14.94. And for the type of week that we had, that's not a bad setup, right? Because bottom line went down. That being said, guess why? The reason it did that, folks, is that you had a lot of people that have already sold GE. The panic is already done there, and now you got to build cars for lower price. You know, GE, we've gone from $32 in 2016 down to 14. You had a high volume low that's laying there at 14.23. So GE still looks to me that is going to be building more cars to get into that $11 to $5 area. Dow finished up 410. NASDAQ up 107, S&P's up 36. As you come over to our website, folks, at TFNN, you are going to see Open House. Traders, Tiger's Den, Open House. Check it out. 30 days, absolutely free. You're going to love it. A lot of traders in there, a lot of tigers and tigresses, about 13 hours a day. We're coming right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at the inside that NDX. So inside the NDX out here today, the strength versus the weakness. You had Ultra Salon was the weakness inside it. That was down 4%. The strength was Alexa Pharmaceutical. That was up 6%. Alexa Pharmaceutical. You had CSX up 4%. You had Micron Tech up 4%. Dollar Tree was down 2.6%. You had Win off 2%, and you had T-Mobile down 1.8%. If we do go over and we take a look at Ultra Salon, that was down $9, 5%, well, 4.4%. That is going after its high volume low that's laying out here at 187. Right now you're at 209, and let's see. So they don't come out with their numbers until the 15th of March. Bottom line is that has been getting under pressure in a huge way. It looks like it's going to be building costs to go after that high volume swing low of 187. And did very well. You break that swing low, and that could be a monster ABC down. 314 is your A. So you're talking 187 is your B. You're talking, what, $130? That'll get you down to 120. Man, that'd be intense. Yeah, well, it makes sense, though, because once you drop out of this range, your next range starts at 132. You know, 132, pretty intense. And more than likely, what you have there is that I suspect that also is going to be another Amazon culprit, because the bottom line is that once those big box stores are great, what it also does, though, is this, particularly inside, let's picture Ultra Salon. What they did is that they brought professional beauty products to the masses at a much better price than you could get prior to that. Because prior to them opening up these large box stores, you had many smaller salons selling product. It's always been a good mock-up product, right? Just like perfumes, the whole ball of wax. Then what ends up happening is that they get people educated, like, oh my God, okay, we can get this much inexpensive at a big box store, and then guess what? Then they start understanding product in general, and what ends up happening when you get a good educated consumer, well, guess what? You're gonna go to Amazon, you're gonna find out you already know what you like. You're going to find it the least expensive you can get, and the rest of the story, as they say, is history, because as Amazon works on a much smaller spread, gets it delivered, end of story. If we stay with that, we go over to UPS. You know, UPS took a good hit last week, as did Federal Express. UPS took a bigger one for some reason. UPS is down from $135. You're at 106. And if we pull this back, what you're going to see is that in 2 weeks, it lost 135. It lost almost 30% of its value in 2 weeks. And this definitely is a Amazon story. This looks to me, this looks like it's going to run to 75. And what this is all about is that Amazon is actually going to start picking up third-party packages. You know, that's, let's see what they have to say here. Amazon start testing in LA. Let's see, they say, oh, I hit the wrong one. Okay, so they start testing this in LA. Let's see. There it is. Okay, so Amazon, of course, they have made several moves in the past for their own shipping and logistics business. Last October, the Seattle-based company said it would deliver packages on behalf of third-party sellers on its website. The company has also moved into delivery and logistics. The bottom line is that what had happened here is that they're starting this thing in LA. That's what they're doing. They're going to start basically doing third-party deliveries. You know, you pick them up, even if you're not doing business with them, and deliver it. Guess what? They're going to eat that business alive. The thing that's intriguing, though, if we go to FedEx, no, I guess FedEx took the same beating. FedEx went down from 274, hit 226. Let me pull this back. The FedEx chart is still a better looking chart than UPS. Whatever that is inside the UPS deal, much better chart, no doubt about that. The thing that's so intriguing, of course, is that could you imagine that you have a monster company like Amazon, you already know how much business they're doing with you. They start their own deal. It's like, that'll never come back. We are not going to create another Amazon in the next, 5, 8 years here. I suspect, things will always keep changing. But as to creating something that can give you that much business, don't see it. Just don't see it. Let's go take a look at the IWM, the small caps. So for the small caps, folks, they got a good bounce, and they had been a weaker indice. But the way that the small caps are trading out here today, now, they also had lighter volume, but the small caps look to me like they're actually going to try to get to the highs of last week, which were 150.79. Right now, you're at 148.16. Now, I expect you're going to it'll give it up then, but that's kind of intriguing. And that very well may have to do with the dollar going lower and some of these commodity equities catching a bid. We'll see if that's the case. If we go take a look at some of the golds out here, I'm going to take a look at some of the royalty stocks first. We'll take a look at Royal Gold. Royal Gold today up 229, not bad. What Royal had done, Royal last Friday tested its high volume low from the 28th of December. Now, we did it on dramatically lighter volume. We'll see whether you can get any follow through tomorrow. Franco-Nevada, FNV. We take a look at FNV. That came off the lows today. This is in tough shape. It's in tough shape on the dailies and weeklies. On the monthlies, it certainly isn't. You're right next to the highs. It's $11 off the highs. But you back down into the strength. We'll see whether that can catch another bid. Up $1.76, but that really hasn't caught a bid today. Rango Resources. This also get fast and furious on the way down. This went from $102 January 30th down to 81. So you almost went down 20. Well, you did go down 20%. Now, this is going to need some repair work. This is some heavy damage, man. Let me just see. You know who loves the stock, folks? Fidelity loves this stock. But they trade the stock. They've traded it forever. Okay, so on the last filing, they actually bought the December filing, so that they haven't done anything since December. Well, that makes sense. It's only February. They bought 150,000 shares. Yeah, so it's not the end of the world. I'm glad they're not sellers right now. You stay right there, folks. Come right back. Dow finished up 410, NASDAQ up 107, S&P's up 36. Come right back, folks.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And, you know, we talk bonds, we talk markets. So you get Ray Dalio, folks, who is one of the most successful hedge fund managers out there. And let me just read you a couple of his quotes, because this is going to get really intriguing watching the bulls and bears fighting out here to understand where is not only just the S&P is going, but where is the bond market going, and how far away from recession are we. So he was out here today, today on LinkedIn, and what he was saying is that he said the risk of a recession in the next 18 to 24 months are rising, and bonds are past their peak. Dalio said that the U.S. is further along in the business cycle than he had thought, and that it's difficult to make a call on equities. Here's his quote. "We don't know exactly how far we are from the top in the stock market and then the economy, though it is clear that we are past the top in the bond market," said Dalio. I like that, because what has happened so many times inside this bond market, folks, is that folks, including myself, has said that's the top of the bond market. Last time I did that, that was about 6 years ago. I haven't charted the bonds in 6 years. Bottom line, they keep coming roaring back, right? Dalio's comments come after the S&P posted its worst rout in 2 years last week. Here's another quote of his. "There's a whole lot of hitting the gas into capacity constraints that will lead to a nominal rate rises driven by the markets. We are in the part of the cycle in which central banks getting monetary policy right is difficult, and that this time the balancing act will be especially difficult. While many investors are focusing on the U.S. potential economic strength in 2018, we are focusing more on 2019 and 2020. He said in today's post, "Frankly, it seems to be inappropriate oversight not to be talking about the chances of a recession and what that recession might look like prior to the next election." A week ago, Dalio said the sell-off in equity markets, which at that point was just beginning, was a minor correction typical of late cycle behavior. At the World Economic Forum in Davos last month, Dalio said he expected the Federal Reserve to tighten monetary policy faster than they had signaled. He said that while economic growth is in the late stages of the cycle, it would continue to improve for another 2 years. Now listen to the last quote. This is normal. Dalio said that at that economic environment, Dalio said that the economic environment was so good for stocks and bad for bonds that it feels stupid to own cash in this type of an environment. It's going to be great for earnings and great for stimulation of growth. Now you can see what's happening there. So in the matter of 2 weeks, you have two different things that are happening there. You have a month ago, Davos is almost a month, well, 3 weeks ago. Davos was 3 weeks ago. He was saying that if you had cash, you'd feel stupid. Well, anyone who has cash last week's feeling really good. The aspect of the bond market, to me, is the most intriguing one in here, because he's saying, okay, it's past the peak. Very well could be. That's the bottom line. And then the aspect of the recession coming up. I'm not quite sure who's getting the recession deal, because the economy's moving, folks, and it's moving really well. If we take a look at the curve of the interest rate curve, what you're going to see, it is certainly not flattening out. What's intriguing here, bottom line is that for banks, this interest rate curve is hitting all the right points. That being said, because of the fact that my take is that this high volume low is going to get tested, number one, it very well could be an ABC structure down, number two. That is going to get us a decent correction, because you can see that we corrected like 11% in, 3 days. So you get violent moves in the marketplace. You just don't get violent moves and they stop. Most of the time when you get a violent move, high volatility will stay for 2 or 3 months. You get a couple more of them. Can it straighten itself out? Yeah, it will straighten itself out, but you don't straighten itself out in a week or 2 weeks. It just doesn't happen. So that being said, if in fact you go after the high volume lows, or we break them and go lower, I suspect, the first time last week, they didn't go into bonds. I expect you're going to see people going into bonds. More so, I think what you're going to expect is that the Fed will blink. They will blink on the interest rate structure. Right now, the potential for a rate hike in March 21st is 100%. When we were trading, if you want to just see how fast the perception can change in the marketplace, though, last week when we went downtown, this got down to basically 73%. This morning, it was laying out here at about 87%. It went up to 100% as the markets basically got higher. So we'll see where this whole shakeout comes inside the bond market. If we go take a look at the TLT, and my take, so when we cut to the chase on everything that Ray said there, the bond market, folks, is going to be the most important thing to keep your eye on. Because if the bond market comes back inside its higher range, bottom line is that would be saying, why? Why is it coming back inside its higher range? And what it'll be saying to me is that because markets are going lower, the Fed is not going to go up on rates 3 times this year, and then that has to do with the aspect of where we are in the rest of the world in our rates. Right now, our 10-year is 2.857. And the United Kingdom is 1.6. In France, it's 0.9%. You have to keep coming back to a one-world structure. And what is the rate of first world countries? What are they paying for debt versus what we are paying for debt? And you can see when we look at the aspect of France, we're paying 150% more for a 10-year note. Is that real? I don't think so. When you look at the United Kingdom, we're paying 1.2% more. Is that real? I don't think so. That, until that differential gets straightened out, meaning that either they come up or we go down, bottom line, I don't see us going up. That's what it comes down to. You know, if we start seeing France going up to 1.2, yeah, we're going to be going up. United Kingdom, 1.8, 2%. Then I can see that, yeah, we'll go up at a slower rate because the spread has to get closer than they are right now. You know, and that's one of the essence that you see about this whole dollar aspect too. If the central bank in Europe starts tightening up, you're going to see the euro go up very quickly. You know, what we haven't had, the dollar is still signaling that we are basically, our currency's getting weaker, and, you know, all you have to do is look at basically the deficit and look at the budget, and, you know, the bottom line is that they just passed a 2-year budget that, bottom line, got rid of the debt ceiling until March of 2019. So Congress can spend exactly what they want to do. Guess what? That, you talk about, you know, a spending spree, we're on one, folks. You stay right there. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if you want to see just how some companies are very loose with terms, folks, EMAN, it's Imagine. They provide, they're in the LED market. Bottom line is that they do about $25 million in sales. This equity out here today went to a price point of $205, closed at $167. You know what this is all about? So this is pretty sick. They had done a filing. And they're filing, and just by the way, some days they do all of 9,000 shares. They did 9 million today. So they did a filing with the SEC, and what they said, and this is the quote, they listed Apple among specified investors. So they put that in their filing. Bloomberg News reported it this morning, and the stock takes off topside, right? Well, the CFO had to come out and say that, oh, well, you are basically reading that wrong. And so listen what they say. This is pretty amazing. This is their quote. The CFO, Lucas, said that he listed the company in the filing because it had discussions with them at an industry event. So the filing saying that they're investors. The bottom line is that they talk to them at an industry event. You know what'd be wild about that, folks? I can tell you, we go to industry events a lot. And if we were a public company, oh my God, the list would be so long that how many companies I have talked to in the aspect of trying to do business with. Bottom line, make sure that you know what you're getting into when you're getting into it. Because unfortunately, a lot of people got toasted and roasted in that in a huge way. Overseas tonight, folks, you can expect Asia. Asia's going to catch a little bid. You know, we'll see how this shakes out tomorrow. We did go over the FTSE, the DAX, the CAT over in Europe. Each one of those, folks, today had a hard time holding price. So what I'd like to see is that you're going to get a little bit higher price. I expect we're going to see that because they're at the very end of their lower end of their range. But we very well may not hold price there. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.